Good morning, everyone. I hope you guys are all having a wonderful day on this fantastic sunny day. Well, it's sunny here at least. We just have a gorgeous sunrise. I'm just going to take a minute to give you a quick look at this. We've got the pond still frozen. A lot of snow here. We just had a snowfall yesterday. Pretty unseasonal. It's now into April and it's still snowing. This really isn't normal here. And then we just have a really gorgeous sunrise. It's too bright to show up on video, but anyways, nice morning. I'll get right to the point here. I just thought I'd speak a little more on the economy. I had some positive feedback on my last video, so I thought I'd speak a little more. I had some really great questions. I had people messaging me asking about deflation and hyperinflation. There is quite a big difference. And one of the main questions I got, which is a great question, is if we enter hyperinflation, is it not better to hold on to your debt, like say your house debt, if you had a big mortgage, and we enter hyperinflation? Essentially what will happen is, let's say you have a mortgage for $500,000 and we enter hyperinflation and prices of everything go up exponentially. So maybe that house becomes worth 2 million, 3 million, who knows? It could really just keep going in a hyperinflation situation. So now that house is worth a lot in dollar terms. And another thing is wages will climb. However, they never climb as much as the price of assets. And I've analyzed the charts over the last 20 years, looking at that pretty closely, because we were in quite a big inflationary period, more so than the governments were telling us. They were telling us inflation was kept around 2% or under, when in fact it was a lot closer to 5% inflation. Here in Canada, I believe it was similar in the US. I have been paying a little more attention to the Canadian economy just because I'm here in Canada. However, I follow the American economy quite closely because, of course, we're all dependent on that, as it is the world reserve currency. So that being said, if we enter hyperinflation and the price of your house goes up, essentially what happens is, now that it's, the price of everything has gone up and the price of your wage has gone up, but you still only owe 500,000 on a house that's now potentially worth in the millions. Is that not a good thing to do? And the answer is yes. That is also part of the reason I believe the governments might be trying to inflate the economy as much as they are, because the governments are also holding a lot of debt. So by creating a highly inflationary situation, essentially it becomes easier to pay down that debt. The debt, essentially those dollars they're not worth as much. So it's, in theory, it should be easier to make that money to pay the debt down, and the debt isn't worth as much per se. Now, the problem with that, or the downside risk with this, is that there's a good chance, in my opinion, we will enter a deflationary period. And there's no telling how long that may last. In Japan, they've been in deflation for 20, 30 years now, and they never came back. Real estate crashed 60% and it just never came back. Sorry, a little bit. I got a dry throat. I had the heater running all night last night. It's been quite cold here, so kind of dried out my throat just having my morning coffee. So excuse the raspiness. And what'll happen in a deflationary situation is the price of everything starts falling. And you don't want to be holding on to a lot of debt for something like, say, a house. Say you have $500,000 worth of debt. And if we enter deflation, that same house might fall 60%, as it did in Japan. And then your house is only worth, what is that? It's only worth 150,000. Okay, so now you owe all this money, and if you're forced, there's no problem if you hold on to it and you're able to pay the payments on the debt, then there's not a big problem. However, if you're forced to sell during that period because times get tough, you don't have enough work to maintain your debt, and you have to sell your house to pay your debt, then now your house sells for 150 and you have a $500,000 mortgage. So you pay down the 150 and you're still left owing $350,000 and you don't have a house. So that is the risk. That's the bad thing. If we enter deflation, like an extended deflationary period, then a lot of these people holding large amounts of debt will be in big trouble. And the interesting thing is that's actually what was what happened in the Great Depression. It was a deflationary situation, and the deflation lasted 20 years. So it's very possible that that could happen, and that's actually what I think will happen. I think we will enter some kind of deflation. I mean, we're already seeing it. Assets are starting to deflate. We haven't really seen it in the real estate yet. However, I think it's coming. The first thing that'll happen is stock markets. People start to liquidate what they can, the things they were kind of betting on, speculative plays. They'll start to liquidate those assets, so stocks and stuff they don't need, toys, campers, boats, second, third homes, that kind of stuff. People will start to liquidate that first. And so that's what we're seeing now. We're seeing kind of the first sell off of the stock market. And that combined with these orders to stay home, we can't work. So a lot of people all of a sudden can't work. And yeah, the governments are giving us these little handouts. It's just not going to be enough, in my opinion. I mean, that's Keynesian economists' only weapon against deflation is to print and get more money into circulation. So mark my words, you're going to see a lot of free money being given out. They'll do it in the form of tax breaks, of handouts, of subsidies, we're already seeing it. They're deferring mortgage payments. They're giving everyone a check in the mail. And that's what they call helicopter money. And it's not a good thing. It destroys the currency. That's what eventually leads to these high inflationary situations is money creation. And when they increase the money supply so much. Canada just announced they're increasing the money supply by 1 billion, which isn't much, but we're a small country. We have very few people. And the US is now printing and creating, sorry, they don't even print it anymore. Everyone says printing, but they don't even print the currency anymore. They add digits to the computer, and that's about it. But they are creating $1 trillion a day. That is just insane. It's totally unfathomable. And it will most likely lead to the destruction of the US dollar eventually. We're not sure how long it'll take, but that kind of stuff just totally destroys the dollar. And the reason it does that is because you want to work hard for your dollar. When I was in India, these people would work an 8 to 10 hour day in the field. A lot of them were actually women. The women work hard, laborious jobs there. And the average pay for a day's wage was $1 Canadian, or right now, that's about 70 cents American. And they would work all day hard labor for that. And in the US, apparently they don't even need to work. You just create the money out of thin air. They just add some digits, create it, put it into circulation. And so what that does is it destroys the dollar, because if you don't have to work hard to create that money, then there's no value behind it. It becomes essentially worthless. People start to look at your dollar and they say, well, if you're not contributing anything on the world market and you just print this money and then you buy up our country's hard earned assets or our limited resources with that phony money, but meanwhile, we're giving you these hard assets or our time in exchange, that's just not a fair exchange of value. And so that is essentially what will cause the currency to lose value. And that is what a hyperinflationary situation is, when the value of the dollar starts decreasing, or I should say the buying power of that dollar starts decreasing at a rapid rate. And basically, I think that might be what we will see here, because everyone's ordered to stay at home, so people can't earn money. So how are they supposed to maintain these debt loads? Most people are carrying record high levels of debt going into this situation. That is not a good thing. There's also record low savings rates. We've never had this little of savings in our bank accounts. So you mix that situation, record high debts, no savings, and now the economy tanks and there's no jobs. I mean, it's pretty simple math, folks. And what's going to happen is a lot of people will be forced to liquidate. And the governments, mark my words, they're going to try their best to inflate this. They're trying to give the currency away. They've already dropped rates to zero in the US. It's essentially free money now. I mean, if you're a central banker and you're in with these banking cartels, they just print the money and you get it for free. There's no risk. These people, they borrow the money and it's absolutely no risk. They don't have to work for it like we do. They just essentially, they're buddy with the people that create the currency. So they get it for free. And that means there's no risk. So that creates just insane situations where these people can buy up the entire economy, all these distressed assets. They can buy up stocks in all the companies. They can buy up companies. They can buy up eventually real estate once it starts to correct. And there's no risk because they don't have to work for the money like you and I. They actually just go and, handshake deal with their buddy and they get, oh, here's $1 billion. Good luck. Go buy whatever you want. It's not fair. And so this is why I'm sharing these videos with you guys. I've been studying finance for 17, 18 years now. And the stuff I learned just blows my mind. It's complete theft and it's not an honest system. I hope things correct here. Not like I'm afraid for the people like you and I that, just the people trying to go about our day and that have a family and we're just trying to do the right thing and save a bit of money for a rainy day and all that and get ahead, get a house, just live a simple life. I feel for all of us. It's because it's these elite, the banking cartel, all these people involved at high levels, they have no risk. They get the money for free. They don't have to work for it like you and I. And we're the ones that pay. We're the ones that we lose big because a lot of us won't be able to hold on to the true assets like real estate, like arable land, that kind of stuff. A lot of us won't be able to carry the debt during these trying times. And I believe they orchestrated this crash because that's how they come in and now they'll buy up all these assets with the phony money they create that they don't work for or anything. They take it, no risk, and then they come in and they buy everything up. So I see a deflationary period where they're intentionally crashing things. They're going to let it deflate. Then they come in and they snatch everything up with the money and they acquire all the assets or a big chunk of them while a lot of us are shaken out of the markets. That being said, I was pretty involved in finance during the 2008 crash, just reading and studying it on my pastime. And I was away for a while. I decided to go traveling, and I was on a extended rock climbing trip through the U.S. and into Mexico. And when I came back from that, I wasn't paying attention to finance. I was just really involved in the moment at the time and enjoying myself. And when I came back, the economy had tanked, and exactly what I thought would happen was happening. Real estate prices were dropping. Prices of gold and silver were soaring, and I thought the whole crash was going to take place then. So I made the huge mistake, and I panicked. This is something you do not want to do. Please learn from my mistakes. Do not panic. Okay? When you panic, you make bad decisions. You act out of fear. And what I did is I put the house up for sale. I thought it's all going to shit here. Excuse my language, but everything's going down. And I put the house up for sale, I sold, and I bought a lot of gold and silver at that time. And I ended up buying gold and silver at the peak, and I sold my house at the very bottom of just a tiny little dip in the market. And from there, real estate tripled. And I missed out on that. A huge, huge run. And all my money was tied up in gold and silver. They dropped in value quite a bit. Silver's still down, a lot of it 50% from what I paid for it, and I've been holding that, and my capital has been tied up, and I wasn't able to invest in the stock market, which had its longest, most historic rise in history. So that's what can happen when you act out of fear. You make the wrong decisions and you miss out on some great opportunities. So maybe my suggestion there, I don't like to make suggestions or give advice, but the lesson that I learned was that by acting out of fear, you can definitely make the wrong decision. And that can be very tricky. So just don't act out of fear. Be careful. I am a true believer that real estate is a great thing to hold on to long term, especially if you have a way to generate income with it. So if it's a rental property, or maybe you live in it and you have a suite, or you're able to operate a business from it, some way that is generating income. If it's just a liability where it's costing you thousands of dollars a month to maintain that mortgage, but it's not producing you any income, it's strictly a liability. And that's something a lot of people fail to recognize. A lot of people are brainwashed to believe that real estate is always an asset. It's just not true. A great fellow who speaks on that a lot is Robert Kiyosaki. I highly suggest reading some of his stuff if you'd like to learn more about that. He's quite the guru when it comes to real estate. However, he's a big holder of real estate as well. It is a great investment, and he does use debt to buy real estate. He just describes debt as a loaded gun. If you're using debt, you need to be careful. You can get completely liquidated. You can go bankrupt quite easily using debt if you're overextended and something like this happens where the economy tanks and you don't have a way to maintain that debt. You will be forced to liquidate. You'll be forced to claim bankruptcy or foreclose on your house. And you might have put in years of your blood, sweat, and tears into renovating that house, making it beautiful, paying the mortgage, all this stuff that you just have to go and sell, and you don't get any of that back. I mean, you might, but it depends when you bought and when you